Namaskar and welcome to the Commodities Weekly Audiocast, your go-to source for the latest updates in the world of commodities. I'm Ravindra Rao from the Commodities Research Desk at Kotak Securities, and I'm here to guide you through another eventful week in commodities trading. In the past week, global financial markets experienced a notable fluctuations influenced by a range of key factors. These factors included developments in the Israel-Hamas conflict, mixed corporate earnings reports, and the rollout of economic stimulus measures in China. The US dollar received a boost from a combination of lackluster corporate earnings, safe haven demand, and signs of resilience in the US economy. Notably, the US economy demonstrated a strong annualized growth of 4.9% in quarter 3 despite higher interest rates. Core PCE prices and personal spending further underlined the strength of the US economy. The ECB, that is the European Central Bank, also played a crucial role by pausing interest rate hikes, which favored the US dollar due to the widening interest rate gap with the Eurozone. As a result, the greenback reached a 3 week high, trading at 106.89. US 10-year Treasury yields also remained near a 16-year high, crossing the 5% mark for the first time since 2007. On the commodities front, COMEX Gold climbed above $2000 per troy ounce, marking its third consecutive weekly gain. The driving force behind this rally was escalating geopolitical uncertainties in the Middle East. Gold had been consolidating below the psychologically significant $2000 per troy ounce level earlier in the week, as Israel delayed a potential ground invasion of Gaza, waiting for the deployment of air defense system by the US to protect American troops in the region. However, over the weekend, Israel entered the anticipated heightened phase of its conflict with Hamas, launching attacks on Gaza from land, air, and sea. While speculative safe haven bids draw much of the recent buying activity in gold, the resilience and outperformance of the US economy reinforce the notion of sustained economic growth affecting the demand for gold. Geopolitical developments in the Middle East are expected to stay in the spotlight as the region prepares for potential escalation. The US has bolstered its defense measure, Israel has initiated a ground invasion into Gaza, and Iran backed militants continue to pose ongoing threats. Statements from Iran's foreign minister have raised the likelihood of a direct confrontation between the US and the Iran. In this uncertain environment, gold prices have risen as the metal benefits from higher risk premium, potentially serving as a hedge against a stronger dollar. From a technical standpoint, COMEX Gold closed the week above the double top resistance level near 2009 per troy ounce. Last week we had mentioned that 2009 would act as a stiff resistance, which was a kind of a double top. Now it has been penetrated, and on a weekly basis, COMEX Gold has closed around $216 per troy ounce. This suggests a bullish outlook with the potential to target all-time highs in the range of $2085 to $2090 per troy ounce, which represents a formidable multiple resistance zone. Downside support is anticipated at $1965 per troy ounce, which should be held if the geopolitical tensions it continues. In case of silver, even silver has moved up to the close of the weekend, and if you look at the spot has closed close to, in fact, above 60-day moving average, and it is inching towards the 200-day moving average near $23.28, which is very close to where it has ended the week. If it sustains about $23.30 on a closing basis, then we might see a further move towards 23.7 or $23.75, which is a possible neckline resistance of an inverse HNS pattern. In case of MCX, coming to gold has moved above the recent highs, which was registered close to July 2023, when it made a high of 61,230 odd. It has breached that, and it might move towards 61,600, which is the next resistance, followed by a strong stiff resistance near 62,700. In case of silver, silver has still not penetrated the 60-day moving average near 72,085. If it takes out the 72,000 zone resistance, then it might move towards 73,000, 74,000 odd levels. Coming to crude oil, WTI crude initially fell to $82.08 per barrel, driven by positive developments, including the release of two US hostages by Hamas and the gradual flow of aid into Gaza through Egypt's border. However, prices rebounded to $86.3 per barrel after Iran's foreign minister issued a warning that United States would face consequences if the Israel-Hamas conflict escalated into a larger conflict. This warning followed US strikes on two facilities linked to Iran in Syria. In terms of price movements, WTI crude oil is expected to maintain a trading range of $82 to $88 per barrel. A decisive break in either direction could establish a clear trend, although the overall bias might lean slightly towards the positive side as long as geopolitical conflicts persist. Finally, LME base metals experienced fluctuations as investors assessed whether China's renewed focus on fiscal spending would provide the necessary boost to the economy, especially in the face of the ongoing real estate crisis. China's legislature approved a plan to raise the fiscal deficit ratio for 2023 to about 3.8% of GDP, up from 3% set earlier in the year. On the data front, Chinese PMI data is expected to show that the country's manufacturing sector continued to expand in October, extending the positive response to economic stimulus from Beijing, despite ongoing challenges in the debt-ridden residential property market. On the technical front, copper has registered a Morningstar pattern, and which will get confirmed only if it closes above 708.45, and if that happens, the upside might go higher till 728, which is the 60-day moving average. Before that, 720 would also act, 720.60 to be precise, would also act as a resistance, and in that scenario the pattern low near 698.20 would act as a support. That would be the reversal support. So until that holds, and if it confirms above 708.45 closing, we might see copper regaining strength and moving towards 720.50 to 728 on the higher side. So traders will continue to remain on the edge due to concerns of further escalation in the Israel-Hamas conflict. On the economic data front, it will be packed week with market attention focused on the US labor report and final PMI figures. Furthermore, the upcoming monetary policy meetings of Bank of Japan, the Bank of England, and the Federal Reserve are poised to influence the markets. While investors largely anticipate a status quo, any indications of hawkish stance in the FOMC statement could push the US dollar above 107 levels. This expectation follows the ECB's decision to hold rates unchanged and signal a more cautious stance in the recent policy meeting. With that, this week's edition of Commodities Weekly Audiocast concludes. We trust that you have found our insights and analysis valuable as you navigate the world of commodities. Until next week, this is Ravindra Rao signing off from the Commodities Weekly Audiocast. Thank you for joining us, and we look forward to having you back with us next week.